Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, I want to go over some interesting things I saw within Tesla's Q2 earnings with the slide deck and things that were said on the conference call. So I kind of think some of these things might be Easter eggs, if you will, or things that people might have glossed over whenever they listen or went through the deck themselves. So I want to highlight some things out, some things that I think are exciting, and maybe try to extrapolate a little bit about what was said, or more importantly, what was not said. So with that said, do me a favor, hit the like button, hit the subscribe button, ring that bell. Let's get into it. Hey everybody, I want to jump on real quick. I made a mistake when I was recording the video where I blocked some of the content with my face. Look, I'm sorry, amateur hour, I know, my mug's blocking the good stuff, but look, I could have either thrown away this hour long worth of content, or I could share with you guys my thoughts, my opinions, and some Easter eggs that I think are within the Q2 earnings call and the actual report. So I figured, what the hell, let's put it out there. But I thought I'd get ahead of it before I find a million comments down below telling me how my ugly face is blocking everything. So sorry about that. We'll be better. We'll try to be less wrong in the future. But with that said, let's get back into it. So we'll kick it off here. I'm going to share the actual slide deck from Tesla's Q2. I don't have a lot of stuff to cover on this because I think most things were pretty much called out by people. But there are a few things I want to just highlight. Again, not saying that these are Easter eggs, if you will, but I just want to highlight a little more about some important things. Also, if you see my eyes extremely red or somewhat bloodshot, or you see me rub my eyes a little bit, don't worry. I'm not on any kind of drugs or anything right now. I incorporated swimming into my workout routine, so I went without goggles foolishly, and so now my eyes are just like really dry. So that's all it is. All right. With that said, let's get into it. All right. So here we can see Q2 2022 update. We're gonna skip right to some things that I thought were interesting. All right. This is the summary. We achieved an operating margin among the highest in the industry of 14.6% positive free cash flow of $621 million, and ended the quarter with the highest vehicle production month in our history. All right. Again, I only highlight this for two facts. One, to point out 14.6% positive free cash flow of $621 million, and again, 14.6 operating margin. This is on the back of this arguably the worst quarter or the most headwinds Tesla has ever had, at least in the last couple years. So I thought that was just something worth highlighting. And more importantly, I want to draw your attention to that last statement, with the highest vehicle production month in our history. This is what we're going into Q3 and Q4 with, and this is why I have been beating the drums of Tesla, letting you all know. Again, none of this financial advice, just my opinion, but if this was how they ended the quarter, and this is what we're going to go into for Q3 and Q4, amongst all the other stuff we're going to talk about, this is highly, highly bullish in my opinion. Okay, they hit a milestone of over 1,000 cars produced in a single week while achieving positive gross margins during the quarter. Okay, this is regarding Giga Berlin. Again, I think a lot of people kind of miss this. I've even seen some people tweeting about this incorrectly. This essentially saying, again, I mean, it's pretty blunt here. Gigafactory Berlin Brandenburg reached an important milestone of over 1,000 cars produced in a single week. Who cares about that part? It's not as important. While achieving positive gross margin during the quarter. That's the important part. So Giga Berlin is already profitable. In less than a quarter it's been open, it's already profitable, already doing 1,000 vehicles a week. This is good signs. All right. Down here, stronger unit economics. This resulted in an overall record gross profit. Customer interest in our storage products remains strong and well above our production rate. Okay, so this I find very interesting. So first of all, it's great about the energy part of it. We want to see that grow. We want to see that actually become the juggernaut that we know it should be or can be. But what I find more interesting is strong unit economics. This resulted in an overall record gross profit. Again, I think there's more stuff in here that we don't realize when it comes to this, and I think that this is going to start to show itself over the next couple of years. So I may just be reading into this a little bit, but I think that this is going to be a big part of Master Plan Part 3, and so keep an eye out for this, okay? The energy part of this, I think this is the next leg for Tesla. Okay, down here. With each of the Fremont and Shanghai factories achieving their highest ever production months and the new factory growth, we are focused on a record-breaking second half of 2022. Again, just cementing what we know. Okay, so this is Tesla. This is Zach telling us, get ready, Q3 and Q4 will be monstrous, assuming that there's no more force majeure or headwinds or just any of the stuff that they've had to deal with, the macros and all that. So I think Tesla is at such a strong point, and I think seeing the stock come down, as painful as it was, this might be even more bullish to get to all-time highs, is that we had this kind of flush out, and here we go, we're going to be stronger than ever. So, and on top of that, like the news is just about to get ridiculous. All right, so let's scroll down. Let's see what else I had. Okay, so I found this very interesting. Automotive revenues was 14.6, this is billion. And then total revenues was 16.9 billion. What this is telling me is that Tesla is starting to grow faster and faster with other lines of business. I think that this is going to start growing faster and faster. I think that this is where we're going to start seeing more of energy. I think we're going to start seeing more FSD beta. We're going to start seeing insurance. I think this number is going to start growing faster and faster in comparison to the automotive revenues. Now, I don't mean it's going to, eclipse the automotive revenues. Of course it's not. But I think that we're going to see this become a delta of, 3 billion and 4 billion, right? I think we're going to start to see that grow. Okay, what else down here? Okay, cash and cash equivalents. We got 18.3 billion down here. There's a lot of talk right now going on with YouTube and people kind of disagreeing about how much cash Tesla really has. Look, I'm not in the financial world as far as, my background and my experience. I was never a Wall Street person. I was never a trained analyst. I was never a investment banker or anything of the sort. I'm just an engineer, okay? But based on what I know and what I can tell, Tesla's in a good spot. Tesla doesn't need to go back to the markets to raise money. I think Elon Musk is of the mindset that he doesn't want debt. And here's the other thing: if they were at a position where they would need to borrow more money in order to continue growing, why would they be paying down their existing debt instead of using that money to? It just doesn't seem to make sense to me. So I think they're very strong when it comes to their cash on cash equivalents. So I don't think that's anything to worry about. Okay. So lots of good stuff here, right? This is just kind of highlighting the revenue, the profitability, the good stuff and the bad stuff, and then cash. But here with the revenue, okay, this again, growth in other parts of the business. It's interesting that they don't highlight what this is, okay? So I think that's very fascinating because I think this is where we're going to start seeing FSD. We're going to start seeing insurance be a bigger and bigger part of this. So keep an eye out for this. I think to me, this is an Easter egg. To me, this is a telltale sign of, hey, there's other stuff that's growing in the business that we're not talking about. Notice not a single person brought up insurance, which I thought was fascinating. All right, profitability. So this is very interesting. So increased average selling price. I expect that to stay for a while just due to inflation, okay, and demand, right? Growth in vehicle deliveries, that's going to stay. Profit growth in other parts of the business. Again, look at that. Very interesting, right? I'm telling you, this is the third time now that we're seeing this, right? Growth in other parts of the business, right? We see that delta between the revenues, the auto revenues and the total revenues. This is growing faster and faster. Now, what's interesting here where they highlight profitability and all the pluses, look at the negatives. Okay, higher raw materials, commodities, logistics, and expediting costs, right? So this, I would say, is going to stay. I mean, if I have to be balanced, right? If I think that increased average selling price is going to stay, well, that's going to be due to the fact that there's higher raw material, commodity, logistics, and expedited costs. Okay, so that would be fair. So I'm going to say that one stays. However, let's look at the rest of these. Higher per unit fixed cost in Shanghai due to shutdowns. That's going to go away. Negative FX impact. That's going to go away. And if you don't know what FX is, foreign exchange is what that is. So that's going to go away. Bitcoin impairment. That will probably go away. So again, out of all of these negatives, the only one that's going to stay, in my opinion, is this one. Higher raw material, commodity, logistics, and expedite costs. However, that correlates with increased average selling price. So it's kind of a wash. So all the negatives essentially will go away and all the positives will stay. And then this one, profit growth and other parts of the business, that to me is very bullish. There's something going on there. There's something that's growing and we don't really have good insight into it. All right. And then there's this part here, driven mainly by free cash flow of $621 million, partially offset. Okay. As of the end of Q2, we have converted approximately 75% of our Bitcoin purchase into fiat currency. All right. There's been a lot of talk about this and a lot of misunderstanding about what this was. So a lot of people were talking about the free cash flow that Tesla would have essentially been negative if they did not sell Bitcoin. So this, again, I don't have a background in finance or anything. I'm just an engineer, but as an engineer, equations matter. And I think with, financial statements, they matter as well. So if you're trying to figure out the free cash flow for a company, this Bitcoin selling or transfer, it's really a transfer of asset from a Bitcoin asset to a fiat asset. This has no part within the free cash flow equation. So this has nothing to do with it. And you don't have to take my word for it. At this point, you've heard many other YouTubers probably talk about this. So, I sounded the alarm on this like day one when this came out. And Andrew Ross Sorkin on CNBC Squawk Box was the one who was saying this completely incorrectly. He was like yelling at my TV with my fiance next to me. And normally I'm not a talker in the morning. In the morning, I just want to nod my head to any questions you have, but this infuriated me. It's like, how can you be so wrong when you're on public TV the way you are, and you're supposed to be someone that people can trust? Anyways, this is all BS. Okay, let's see what else we have here. Okay, here's something interesting. So come back up here. So growth in other parts of the business, right? I keep talking about that. So I've mentioned FSD, I've mentioned insurance, but also don't forget about the superchargers. Okay, this is growing, pretty rapidly, and there are estimates out there that it's, a $1 billion+ business at this point for Tesla. So here's yet another part of the business that's growing faster that we just don't really get a lot of insight into. All right, so we're almost done with this, and I'll get into the more interesting parts regarding the actual call that happened. Okay, so I just want to highlight this. Okay, I think a lot of people caught these. 550,000. This got bumped up by 50,000. Shanghai, 750,000. This got bumped up by 300,000. I think it was 450 before. Berlin, Texas, these really didn't have numbers on. They're 250 now. But there's a couple things I want to highlight. No pun intended. Okay, first of all, this 750, this, in my opinion, does not include this expansion within Shanghai. I'm not talking about the supposed second giga factory in Shanghai. I'm talking about the current factory and the retooling of the lines they're doing to increase capacity. This number does not include that, in my opinion, and I think the numbers are pretty obvious about that. Now, on top of that, these 250,000, this equates to about 5,000 vehicles per week out of Berlin and Texas, which I think we'll probably get to that by the end of the year. And that's not just me saying that or speculating. That's based on, we'll see on the conference call statement from Elon Musk. So that's great. Now, the part that I thought was very interesting, and to me somewhat of an Easter egg, is this part, robotaxi and others. Well, how interesting is that? This did not say that before. This just said future products. Now it says the robotaxi. So let me extrapolate a potential idea for all of you. So first time we heard Elon actually talk about robotaxi as an actual product was at Cyber Rodeo when he was on stage. He mentioned it. A week, 2 weeks later, we had Q1 earnings, I believe. And was that right? Q1 earnings? Yeah, I think that's right. Anyways, a couple weeks later, we have Elon Musk talking about it during the conference call. All right, so during the conference call, he's talking about robotaxis. So that's interesting. And now we see it here on the Q2 deck. We see them mention robotaxi and others. All right, so my hypothesis is that AI Day, we might be seeing a robotaxi prototype. All right, I know that AI Day, everyone's thinking about the bot, but I think that the robotaxi may be part of it as well. So remember, you heard that here first. I'm the first one to say that. So just a hypothesis. We'll see what happens. The other thing I think is interesting is that it says and others, robotaxi and others. So I think they're giving us a little something here, right? A little hint. Also, just to give myself a little bit of credit, I guess, if you will. Look at here. You see, so let me see. Okay, here. Europe's in red, US and Canada's blue, China is green. So you see how for this quarter, essentially, they were flat when it comes to deliveries in Europe. This is essentially what I had estimated, that because of the shutdowns in Shanghai, that they would focus on more local deliveries rather than exporting to Europe. So I think this kind of cements that. So, just giving credit where it's due. Sometimes I'm right, which is nice. All right, so this is another one that's interesting. The robot count in our body shops in new factories dropped by over 70% per unit of capacity compared to our first iteration of the Model 3 body shop. Okay, so think about that. 70% body shop robot count per unit of manufacturing capacity. Look at this. Look at the difference here, okay? This is drastic, all right? And so if you don't think this translates into numbers, into gross margins, into everything, you are mistaken. This is a huge, huge deal. Okay, let's see. Service is another. Again, I highlight the income coming from the revenue coming from other streams. The supercharger business, which is part of services and other, is increasingly serving both Tesla and non-Tesla customers to help accelerate the transition to sustainable energy even faster. We are excited to open up our global fast-growing network to other EV customers. I was talking to my dad the other day and just talking about, the lead just in so many ways that Tesla has, and that Tesla's more than just an auto company, okay? Tesla is a auto company, right? So think a Volkswagen. Tesla is an insurance company, so think Geico. Tesla is a gas station company, if you will, right, for the superchargers. So think BP, think Shell. Tesla is a chips making company, right? Very special AI chips, so think NVIDIA. Tesla is essentially developing their own supercomputer for neural net training. That's a potential AWS-like part of it. Tesla has, full self-driving, right? So think of Cruise or Waymo, and then Tesla's planning on doing a robo-taxi. So again, think of a Uber or Lyft, right? I mean, you can go on and on with Tesla. So Tesla's not a one-trick pony, right? And so again, I think things like this really matter because sure, they may not be as big as the auto revenue we see right now, but in time, all these things are going to add up to the bigger pie, and it's going to get bigger and bigger. All right, so I think that's all the stuff I highlighted. Let's just take a look at some of these pictures. They're kind of cool. Look at that. I'm very excited to see this. So this is almost done, the Tesla. I'm going to the shareholder meeting. It's not this coming up week. It's the following week. So I got invited, got my tickets. So me and my fiance wife will be heading out there. And unfortunately, I can't bring her, which kind of sucks. It's not a +1 event. So, is what it is, but we'll be out there. We'll be in Austin. If you're going to shareholder meeting, be sure to find me. I'll be wearing my Fremont, Shanghai, Berlin, Austin shirt. So, if you see me, stop by, say hi, maybe we'll grab a beer while we're there or something. All right. So, speaking of that, shareholder meeting. All right. So let me stop sharing this for a second. And what I want to do now is I want to pull up something else that I made. So I did this a little differently. Let me share. Let me see how this works. Here we go. There we go. Cool. Okay. So I might be too big for this. Let me see if I can. Well, I can move myself at least if I need to. All right. So Elon Musk statements. You got that. All right. Yeah. I'll just move myself as we go, and if I need to. So let's just start here. Okay. So first thing, all right, so Elon said that production records in June for Fremont and Shanghai, setting us up for a breaking second half. Again, if that's not a bullish thing, I don't know what is. That was one of the key things I said that Elon, or mainly Zach, would have to say out the get-go, and these were literally like the first words out of Elon's mouth. All right, next. Giga Texas to exceed 1K per week in the next few months. All right, so a little slower than we probably wanted, seeing as Berlin has already hit that milestone. But this is good because this gives us context of what to expect. Moving forward with Giga Texas. So I like this because we have something to model it off of. So in the next few months, so the way I see that is by the end of Q3, they should be at 1,000 per week. So I think that's good. All right. He said that they have enough 2170s for the rest of the year. 4680 important for next year, not this year. So let's talk about that for a second, because I think that's a bigger deal than people think. And this is a potential, I mentioned that we'll talk about Easter eggs, but this is a potential bad Easter egg. All right. So it's great that they have plenty of batteries and plenty of chips for the rest of this year. But next year, 4680 batteries are going to matter. So we'll talk a lot about 4680s in a second, right? I have a whole slide that's just dedicated to 4680. I guess I should take the time to talk about this. So it's 5 slides. We're going to talk about Elon Musk opening statements, Zach's opening statements. We'll talk about Tesla AI. We'll talk about Tesla 4680 batteries, and then lastly, just some last few comments that were made. So the majority of this will be 4680 battery and AI topics. But anyways, if they don't have enough if they aren't ramped up with 4680 batteries in a somewhat meaningful way by next year, this could be the bottleneck, the choke point for them. So it is something worth noting. Okay, we have installed the second generation equipment up for 4680, so that's exciting. So what he's saying here is that in Texas, in Giga Austin, that the battery lines for the 4680 have been installed, and as you'll see soon here with Drew's comments, they've been commissioned as well. Again, I think that was another thing that was kind of glossed over by some people, but that's very important because that means that now they can start getting those lines going, and we'll talk about numbers in that in a second, right? I had to go back and I had to really listen to the call to get all these details down and written down. So hopefully, everyone appreciates that. All right, 35 million miles with FSD beta, more autonomous miles than all other companies combined. No matter what you think, who you think is leading this or not, this is just monumental as it is. If there's nothing else, you can't deny that Tesla has the most amount of data. Now, with a first principles approach, if you were to think, based on everything we knew from neural nets or any kind of AI, any AI knowledge that we have at this point, what we've learned and what we know is that in order to solve a problem with AI or neural nets or to get them trained really well, you need data. You need lots and lots of data. So it would stand to reason whoever has the most data will eventually will have the lead when it comes to autonomous vehicles. I'm not saying that you'll be able to solve it. We don't know. We haven't gotten there yet. We know we're not finished. But it would stand to reason that they do have the lead. Now, as an engineer, I think nuance matters. I don't want this to be a forever video. I know that's going to be a little bit longer one already, but data alone is irrelevant. What matters with data is being able to label it. All right. So being able to understand what your data is what matters the most, because what really will set up everybody apart is whoever can have the best engine within their company to determine what's what within that data. So we can sift out the data we don't need and keep what we do need. That is going to be the most important part. And once again, I do think Tesla has the lead when it comes to that. All right, made a lot of improvements in manufacturing, reduced robot count for body shop by 70%. We've talked about that. Again, to catch up with Tesla when it comes to from this perspective, it's going to be essentially impossible. They're just iterating so much faster than everybody else that I don't even... You would need a company to be able to think, okay, this is where Tesla is. How do we just get to the next step before they do? And I don't see anyone doing that. So we'll see what happens, but it seems like it's an unassailable lead. All right. We will bring another level of simplicity and manufacturing improvements with Cybertrucks and future products. Okay, here we go. Easter egg, in my opinion. So this is in his opening statements. He's saying that after on the back of talking about a body shop dropping by 70% for the robot count, that they'll take this to another level of simplicity when it comes to the Cybertruck. And then you could hear him speak. He kind of fumbles a little bit, and then it's almost like he said, whatever, I'll say it. And future products. Again, future products. What is this? In my opinion, I still think the robotaxi is the next product. And I'm starting to more and more believe that they're going to unveil this during Tesla AI Day Part 2. Again, I think this is an Easter egg. We are not quite ready to talk about now, but will be exciting to unveil in the future. So what's this relating to? This is talking about AI Day. Okay, so there was a question asked regarding some essentially some things regarding FSD, the bot, and all that. And Elon's saying we are not quite ready to talk about it now, but it will be exciting to unveil in the future. So let's continue here. Our team continues to focus on Cybertruck production, readiness, and some future platform designs. Again, if this isn't an Easter egg, I don't know what is. Some future platform design. This is Elon's words, some future platform design. So what would that be? In my imagination, it's definitely something to do with the robotaxi, or it could be, and I talked about this before. Let's say they do decide to do the $25,000 vehicle, which I think inevitably they will. I have no problem saying that I was wrong or changing my mind, right? I think that's what makes, at least from an engineering perspective, what makes a good engineer is your ability to get new data and then, change your mind and be able to think through it. And so for a while, I thought that Tesla would not even bother with a $25,000 vehicle purely because of FSD. But then I spoke with Farzad. Farzad had a good point. There are many countries like India or some places down South America where people don't care about lane lines or anything. People just drive recklessly, and that may be a place where FSD it's not practical. It doesn't really make sense to have it there. In those cases, well, you're going to want that $25,000 vehicle perhaps. So I could see them doing that. But what I could see them doing is making a platform, like he's saying here, future platform design, but make a platform where all you have to do is, kind of change the outer body of it, right? The skin of the vehicle. And then you'll have a specialized one for Europe, for the US, for Japan, for South America, things of that nature. So I think that could be interesting. But anyways, the point is some future platform design. So they're working on a new platform, and I find that to be a Easter egg. Cybertruck may be our best product ever. We've heard Elon say that a few times. FSD beta is on track to be released for all customers in North America by the end of this year. Guys, we are at the end of July. Okay, we are end of July. Today is July 24th as of this recording. And Elon is saying that he still thinks that it's on track to be released beta wide, the FSD beta to go on wide release by the end of this year for all North America. This to me is bullish. This tells me that they're releasing things that 10.13 is going to be pretty good, that they're seeing less and less disengagements, right? So I think that it's very bullish that this is still on track. Again, this is something that I thought that they had to say on this earnings call for the stock to move well. And as we all know, it did move well. All right. Hopefully, depending on regulatory, we will be releasing in Europe and some other parts of the world. This regarding FSD beta. So he's saying that depending on regulations and regulators and their decisions, that they will release FSD beta in Europe and other places. So again, I think that's great. That's a sign of confidence. AI day part 2 in September, and this is another potential, I think, Easter egg. I think people will be amazed at what we are able to show off in AI Day. And I'll show you some other comments in a little bit here that he said, but he's building this up. Why else would he build this up unless he was really confident about it? And Elon doesn't normally do that. So this to me is like, okay, what do you got going on? What do you have hidden up your sleeve, Elon? There's something happening here. All right, let's go on to the next. All right, so here we go. Zach's opening statements. So this is a lot shorter. He said, energy business reached record gross profit. Again, goes back to what I was saying before about other modes of revenue for the company. I think it's going to start growing faster and faster. Keep an eye on that. Gap auto gross margins had a temporary decline. Fair enough. We expected that. Austin and Berlin operating expenses, startup costs have wound down. So this is great because it means we don't have to take a hit on that anymore. We are positioned for a record-breaking second half of the year. Same thing Elon said. They are freaking bullish, okay? So if they're bullish, we should be bullish, in my opinion. And I think the stock is going to respond to this. It's already responded a little bit. I think we got a long ways to go. I still think that we're going to hit maybe not all-time highs, but at least reach the highs we were at before. So I'm anticipating about $1,200 by the end of the year. Austin and Berlin will continue to impact margins as they ramp. That makes sense. We expect that. Still expecting 50% year-over-year growth will be difficult though. Okay, so this is Zach taking a cautionary approach. I think that they're kind of sandbagging here, but by a little bit, not by a lot. Okay, when I say sandbagging, I say maybe they can do 55%. All right, so but this is bullish. This is what I said. These are all the things I said they had to say on this call, and this was the one main one. And it couldn't be Elon saying this. It had to be Zach saying this, right? Because people believe Zach more than Elon, or at least Wall Street believes Zach more than Elon. So Zach saying this just reiterated what we all know and we all believe about the ramps of everything, what's going on. So this was very bullish. Okay, let's transition into Tesla AI. Questions and comments that were discussed regarding Tesla AI. When I say AI, this includes AI Day, the bot, FSD, right? Everything that would encompass that part of the spectrum. All right, take one last sip and let's get going. Okay. So there's a question asked about unified vector space. So essentially, if you don't know what unified vector space is, very high level, all it is, it's all the cameras together. And instead of using C or C++, right, people call it heuristics, right? So like manual coding by humans. Instead of using that to stitch all of these videos together, and instead of labeling based off of a bag of points, or in other words, based off of like the pixels themselves, right? We're using actual at the neural net level to identify what's what at the exact same time as we're stitching all these videos together for surround video. That is what unified vector space is. So Elon said that it's probably not needed to solve for full self-driving, although I will caveat, Elon does not know this for a fact. Nobody can know this for a fact because it hasn't been solved yet. So let's be sure to make that very clear. However, he does say that it would be much more efficient, and he thinks that they'll certainly get there before the end of the year for a unified vector space. So we're already seeing it. They're essentially deprecating heuristic coding, and they're deprecating old neural nets in order to take advantage of a architecture type neural nets that leverage unified vector space. It's already happening. We are confident of improving the frame rate as we move away from legacy neural nets comfortably above 24 frames per second. Okay, so for those of you who don't know much about frames per second, 24 is what you see for movies. Okay, so Elon was saying, I think that they think they can get upwards towards 36 frames per second. Why does this really matter? Okay, so on the live stream that we had during earnings call with Farzad, Hans, and everybody else, we talked about this, and we kind of had a little bit of a debate. In my opinion, this speaks to a very, very big improvement for FSD if they can do this. Why? Okay, well, just think about it. If I have 24 frames per second, right? So I'm seeing 24 frames per second. The neural nets, FSD, it gets this information, and that's how it's seeing the world around it. And based on those 24 frames it's getting per second, it has to make a decision on what's going on in the world and execute on how to make movement within the world. Okay, so the vehicle is trusting these 24 frames it gets. It might even be less that it has right now, but it's trusting on this data to make sense of the world. What happens if I can go from 24 up to 36? Okay, well now the neural nets, FSD, just got so much more information about the world around it. And with all the extra amount of information in the same time frame, it can have more confidence in decisions it's going to make. So another way of thinking about this would be if I look left and I look right when I go to drive. But maybe I would make a better decision if I looked left one more time. Maybe it's not the best analogy, but you get the point. The point is, with more data, the vehicle neural nets can make better decisions. What does that mean? More confidence. What does that mean? Potentially less jitter, better decision making, etc. Right? It's a ripple effect. Okay, so there's a question about the FSD progress, and essentially what Elon said is we have a team of 120 people in our software AI group. That Andre Karpathy leaving, that he's going back towards more academia type, going back to more education-based AI learning, and just going back to that, right? That's where his his current passions lie, and so that's what he's going to do. And so really the question around FSD progress was centered around the fact that, is this going to be a problem for Tesla because Andre left? And Elon had a joke about it, but we don't need to get into all that. All right. So Elon says, I am highly confident we will solve FSD, and it still seems to be this year. It does seem as though we are converging on solving full self-driving this year. So very bullish. So then Colin Rush from Oppenheimer, I hope that's how you spell your name. He asked about pricing strategy around FSD. Elon them say, we will increase price for FSD sometime later this year, probably just before, sorry about the typo, just before we go to wide beta. The value of FSD is extremely high and not well understood by most people. It's currently ridiculously cheap, assuming FSD materializes, and it will. So I thought that was interesting. So I like that Elon caveated that, saying that assuming that it materializes, right? Saying that it's essentially worthless if it doesn't materialize. But then he ends with an emphatic, and it will. So I like the bullishness there. It seems like before the end of this year, before FSD Beta Y release, we're going to see an update. So that's good. William Stein. Okay, so he essentially asked for an update on AI Day and everything. And Elon says, I don't want to steal thunder away from AI Day. I think we will have some exciting news on AI Day that I think will be further ahead than most people think. I would love to answer you, but I think we will leave that excitement for AI Day. This is a Easter egg if I've ever seen one, okay? I don't know how people aren't talking more about this. And the fact that Elon literally said, I think we will be further ahead than most people think. Geez, just extrapolate that out. What is he talking about? Is he talking about beta? Is he talking about robotaxi? Is he talking about Optimus? What does that mean? Right? This is so ridiculous. Like, to me, this is the biggest Easter egg of them all. I'm going to be on my honeymoon during Tesla AI Day, and you better believe me and the wife will be sitting there watching this, okay? We'll be in Mykonos in Greece, and we'll be watching this because this is going to be a big deal. This is going to make the last AI Day look like a joke. We have a lot of custom silicon in the vehicles. We try to go after where there is a tech advantage. Tesla is as much a software company as it is a hardware company. Achieved dual use of single chips. The shortage forced us to simplify, and now we use less chips. Testament to our software team. Goal is to integrate more with fewer chips. Again, I just put this in here because I thought it was really bullish that they took this headwind of a chip shortage and they leveraged it into being more cost effective by now getting dual use out of chips. That's really bullish for me. All right, next up, we'll talk about Tesla 4680. And this is where there's a lot of good news that we are getting, and we're learning a lot more about the 4680 battery. So let's get into it. So the first thing, as you could imagine, Elon said again, lithium refining, you can't lose. So he's encouraging entrepreneurs to get into the lithium refining business. And trust me, I looked into it a little bit because, how can you not? When the greatest entrepreneur of all time, or at least in our lifetime, is telling you that you can't lose on lithium refining, hard not to think about it. So there's a question regarding the 4680 and the structural pack and the fact that Elon said it's not yet optimized. And so between Drew and Elon, they said that the structural pack essentially has dual use, right? So it's using the structural pack for dual use versus carrying the batteries like luggage in a car, right? So it's like you can have your suitcase and all that in the car and you can carry the batteries like that, or it can be part of the mass of the vehicle, part of the structure itself. And so Elon used the analogy of the structure being the storage like a plane wing, right? Airplanes, they don't have fuel tanks, right? Instead of having fuel tanks, they just leveraged the wing. They built it out to be a tank itself, right? So the wings are the fuel tanks, and the fuel just resides in that. And so this allows you to have dual use, much like planes. And what he was saying was that this is essentially a architecture, and that they may right now be a C grade within an A architecture. So regarding this A architecture, what does that mean? Well, analogy for that would be one that I used the other day with Farzad. And so the analogy I said was, imagine that you had a A+ engineer at Ford or GM, And they're used to doing things there the way Ford does it, with all the red tape and, just kind of status quo of this is how we do it, it's how we've always done it. Okay, now you take that situation, and I would say Ford or GM, they're the C architecture, okay? So that engineer may be an A engineer within that C architecture of the business. But then you look at Tesla, and we call Tesla the A architecture. So imagine you took that A engineer in that C architecture and moved him over to Tesla. Well, maybe now that engineer is a C engineer, but at least he's in the A architecture. And why does that matter? Well, that matters because now that engineer can learn and can improve and change their ways and adapt and learn, and then they can be an A engineer within the A architecture. Same thing here. All right, so essentially what they're saying is that the structural pack is the way to go. That's the A architecture. Our execution may only be a C right now, but we'll get better over time. It's a new technology, it's a new architecture. We're learning, we'll iterate. But what we do know is it's the right move. So again, this is iterated by Drew, saying that before, this was a hypothesis before, right? They really didn't know, but now that they know, they tested, they put it into vehicles, and they have a real product to look and be the proof that they're confident that this is the A architecture. This is the way the vehicle should be built. And then he also mentioned that it's beating the non-structural pack. So essentially, if you compare a structural pack Model Y high performance versus a Model Y without structural pack performance, the structural pack is beating it essentially on every metric. So then 4680 batteries are making progress. So this is Drew speaking. And he said that we expect to ramp total 4680 production to exceed 1K per week by the end of the year, hopefully well before. This is a weird one, okay? Let's not call this an Easter egg. Let's just call this confusion on the call. Everybody seems to think different things, but I would say the majority of people think that Drew meant 1,000 vehicles with 4680 battery per week by the end of the year. So I don't know how to think about this. It's somewhat, look, long term, it doesn't matter. Obviously, we're going to get there. It's not a matter of if, just a matter of when. But it would be nice to see this at a higher clip, right? Especially if we expect to see higher volumes out of Giga Austin and Berlin. You would like to see them using the 4680 batteries. It would be nice. All right. In Q2 at Cato, we fully automated a dry anode something. And the reason I wrote dry anode something is because I couldn't really understand what Drew was saying. It kind of, his words just melded together, but essentially it was using the dry anode, the process, right? The tooling. And so the point he's trying to make here is that in Q2, Cato was fully automated, and they were able to unlock a major increase in the production and improvements in yields since March because of the Cato output has grown. Because of this, Cato output has grown 35% month over month each month since the yields throughput. The factory are already on at targets in most areas and trending in that direction in a few others. Okay, so let me repeat that because I just kind of spoke over myself. So essentially, they had this great breakthrough regarding something to do with the anode, the dry anode process and tooling. So this allowed them to unlock a major increase. And since then, they've been seeing 35% month over month results. And now since this, they've also noticed that the yields and throughputs at the factory are already at targets in most areas, at the targets that they wanted, right? So the targets that they set for themselves, that they're essentially all there already, at least in most areas. And if not, they're trending that direction in a few other metrics. So that's very bullish. It seems like they've essentially just cracked the code to this. And that's what's leading them to be more and more confident with the 4680 battery. It's not the battery. Again, I can't stress this enough. It's not the battery. It's not the chemistry. It's the manufacturing. It's how can we figure out the manufacturing for all of this. So I think that's very important. And then he goes on to say that we fed the learnings from Cato cell and pack lines to Texas. And so we'll see here now, there are some new ramp challenges to overcome in Texas and Berlin due to all of this. So in other words, everything they're learning at Cato, it's going to, when you scale that out, you're going to learn new problems that you didn't have before because you're essentially 10xing the scale, right? So if say Cato's at 10, you want Gig and Berlin to be at 100, that's a 10x, right? So that's a big difference. So, but they'll figure it out, essentially what he's saying. So specific to Texas, cell equipment was installed and commissioned. So this goes back to what Elon was saying before about the new iteration of the 4680 battery equipment. All that was installed. So here we have yet again Drew specifying that it was installed and commissioned. He says that we plan to start production in Texas this quarter and aim for Texas to be capable to exceed Cato by the end of this year. So I think that's very bullish. All right, so Pierre Ferragu, he essentially said, had a pretty straightforward question, but they said that the priority is on simplicity and scale for the initial 4680 battery, not putting all the bells and whistles. So I guess what was the spirit of the question? The question was asking, essentially, we've seen YouTubers with their 4680 battery Model Ys, and they're doing tests, they're draining it, they're trying to fill it up, they're trying to figure out, how many kilowatt hours are really in this pack. Are they sandbagging? Do they have some extra cells there? Do they plan on locking some future mileage? Are they essentially sandbagging the current Model Ys with 4680 batteries as to not Osborne themselves against Fremont factory? There's a lot of things that are going on here. But essentially what Drew said is that they're just focused on simplicity and scale right now, and that they're not putting in all the bells and whistles to make the 4680 battery as good as it could be, like what we saw at Battery Day, right? They need to get to scale and simplicity first. And then he said, as we ramp, we're planning to layer in new material technologies and higher range structural packs. We are not holding back goodies for some rainy day. So in my opinion, I think Drew kind of sidestepped this one. Okay, so to me, this could be an Easter egg. I think Drew sidestepped this one. I don't think he actually answered the question. But guess what? No matter. We don't need to worry about what Drew says. We don't need to worry about what Elon says. Sandy Monroe is tearing down a 4680 right now, battery pack. So we'll know the answer soon enough. So we'll see what Sandy comes up with. All right, so then Elon chimes in saying, there are many challenges and unknowns that they have to overcome. For example, feeding the anode and cathode dry electrode process. They will solve the unknowns, but they come up during the ramps. We are making rapid progress on that front. First order of business is high volume with high yields. Then we can work on energy density and costs. So pretty straightforward, pretty much what we know. But so this, the feeding of the anode and the cathode dry electrode process, this I believe is what Drew is referring to back up here about solving, right? So this dry anode, something that couldn't understand the tooling, that's what would unlock the major increase. So, okay, so then Drew also said Cato made major advances regarding the dry electrode process. Again, so I forgot I had this in here. So this is regarding what Elon was saying. So it sounds like what Elon's saying was the constraint or the difficulty. It sounds like they've solved that problem. Drew also says a lot of these higher energy dense technologies are not scalable, so they are a distraction. This is very telling, okay? If we assume that Drew knows what he's talking about, if we assume that Drew is a thought leader when it comes to batteries and this technology, okay, or that Tesla, forget about Drew, just Tesla and all their engineers, what they're saying is that you can have a lot better high dense energy technologies that would blow out the 4680 battery. Maybe it's solid state. Maybe it's other batteries that, can last for, 5 to 1,000 plus miles in range. What Drew's arguing is that the technologies aren't scalable from a manufacturing perspective. And if that's the case, that they're nothing more than a distraction. Okay, it's a false dawn, if you will. It's not going to be something that's going to be that you're going to leverage for vehicles because you can't scale it. So I don't know what all the knowledge that Drew has regarding some of these technologies. You have to imagine Tesla's looking at everything at all times. But if you can't scale it from a manufacturing perspective, then it's not really pragmatic to even think about them or to incorporate them into what you're doing. And so I think that's kind of what Drew was getting at. But That's me kind of reading between the lines. Okay, how much material have you secured with long-term contracts for 50% per annum? And so then Elon says it's difficult to predict 10 years out. We see constraints in refining of the materials necessary for lithium-ion batteries, not due to scarcity. Today's concerns a few years down the road would be machinery to refine lithium itself, and then the cathode. Working with our suppliers to ramp their capabilities as soon as possible. We have plenty of supply for the next 2 years, but need more in the future. So we should be good at least through 2023, 2024, it sounds like. So if you do math on that, right, 50% CAGR, compound annual growth rate, let's say 2022, we do 1.4 million, okay? So then 50% of that would be another 700,000. So just call that 2 million, just for easy numbers. So 2 million in 2023. Yeah, right? Is that right? No, that's bad math. I'm sorry. 2023. No, that is good math. Oh, geez. Sorry. Long day. The chlorine is still getting to me. All right. So, yeah. So 2023 would be 2.1 million vehicles, 50% CAGR. That would put you at 3 million in 2024. And so they have enough material contracts essentially for the next 2 years. We are working on lithium refining ourselves because that's the best way to help accelerate something to do. The best way to accelerate something is to do it yourself. So I thought this was very interesting. It looks like Tesla is maybe getting into the lithium refining. I think a lot of people glossed over this one, but this may be them piloting something so that they can get into this business. I'm sure they don't want to, but wherever the limiting factor is, wherever the bottleneck is, Tesla is going to go there. All right, final things here. I know we're approaching an hour here, so I'll go through these fast. This is the last bit, I promise. Hopefully you found this to be valuable up to this point. If you have, you know what to do. Hit the like button, hit the subscribe button, ring that bell. With that said, let's get into it. All right, so Elon was asked about competition with Tesla, EVs, and things of that nature, and Elon said the best China EV manufacturer right now is Tesla China. He also said that he respects the Chinese EV manufacturers and that they're going to be a force to reckon with worldwide. He also said any company that is not as competitive as them will suffer market share decline. Hello Ford, hello GM, hello Stellantis, hello Volkswagen, on and on and on. If I were to guess, take this with a grain of salt, I think inflation will decline towards the end of the year. Now, I get it. Oh, Elon, you suck at predictions. You've been saying full self-driving is going to come this year, and then this year, and then this year, and then this year, over and over and over. Okay, I can hear that. I can almost say, fair enough. But this man predicted this recession almost down to the month about a year ago. So if he's saying this about inflation, maybe you don't trust him with his FSD predictions, okay? Yeah. I'll give you that, right? Even though I trust him with this recent one, but I'm a fool, so take that with a grain of salt. But his macro predictions have been pretty damn spot on. So, none of this financial advice, but take that with a grain of salt, like he said. But the man was right last time. Okay. Frankly, prices are at embarrassing levels, and he's referring to the vehicles. He said supply chain and crazy inflation is the reason why. I am hopeful that at some point we can reduce prices a little bit. So I think that's good. We want to see prices come down. We have a good chance at exiting this year at 40,000 vehicles per week. We have had many 30,000 car weeks. A 40K car week is within reach by the end of this year. Well, have you done some math? Okay, if we take 40,000, right? And we multiply that by 52 weeks in a year, just for a run rate, that puts you at 2 million vehicles per year by the end of this year. Now, if you recall, this year we should be hitting 1.4 million for that 50% CAGR, compound annual growth rate. Well, what's 50% of 1.4 million? 700,000. What happens if you put 700,000 on top of 1.4 million? Well, you get 2.1 million for 2023. Again, 2.1 million. See how these things kind of add up? Interesting. Interesting. And I don't think that's an Easter egg. I think that's a big hint, a big telltale sign. Elon's telling you. He's telling you. He's saying what it's going to be. All we have to do is listen. All we have to do is invest. All we have to do is believe. He says, I'm confident we will get to 5,000 vehicles per week in Austin and Berlin by the end of this year or early next year. And then probably, but not certainly, 10,000 per week for each by the end of next year. Okay, let's do some math again. 5,000 vehicles per week, 52 weeks in a year. That comes out to 260,000 vehicles. Okay. What did we see in that slide deck for Berlin and Austin? Didn't we see 250,000 with a greater than number? Very interesting. Now, if we take 10,000 by the end of next year and we multiply that by 52, that comes out to 520,000 vehicles per year. So let's just extrapolate that. Does that not get you to what you need for 2024? I think it does once you add it all up, including Shanghai, right? All this is starting to make more and more sense for a CAGR of 50% for the next couple of years. Finally, Elon's personal role in the company was questioned and how long he'll be there over the next 3 to 4 years. And Elon said, I'll be on the calls, referring to the quarterly earnings calls, if there is bad news. If there's only good news, I won't be on the calls. I will be at Tesla so long as I can be useful in helping advance the cause of sustainability and autonomy. So we'll leave it there. That's all I have. I think there's a lot of good stuff there. I hope that I maybe brought your attention to at least a couple things that maybe you glossed over last time. I think there's a lot of Easter eggs here. I think there's a lot of stuff that they're telling us without telling us. I think AI Day, we're going to see some very exciting things, potentially new products, maybe even a new powertrain or a power platform, if you will. I think the fact that they gave us these numbers, it's going to be excellent for us to model out for the short term. Short term meaning next 1 year, 2 years. But I thought this was an excellent call. I think there's a lot of good things in here. Again, Easter eggs. I think the robo-taxi is a big one, but we'll find out soon enough. All right, I don't want to drag this out any longer. Hey, if you're going to be at the shareholder meeting, look for me. I'll be there. Let's grab a drink. Let's say hi to each other. It'll be fun. All right, I'm going to leave it there. Do me a favor. If you enjoy this type of content, hit the like button, hit the subscribe button, ring that bell. Love you all. Peace.